Elon Musk borrowed $1 billion and paid zero income tax. A nurse earning $70,000 paid $12,000. This isn't illegal. This isn't a scandal. It's a strategy billionaires use in plain sight, and almost nobody knows about it. Here's what doesn't make sense. The richest people in America keep getting richer, but when you look at their tax returns, many of them pay little to nothing. Jeff Bezos paid zero federal income tax in 2007 and 2011. Elon Musk paid zero in 2018. Michael Bloomberg, zero in multiple recent years. Meanwhile, if you work a regular job, the IRS takes their cut before you even see your paycheck. So what's going on? Are they cheating? Hiding money offshore? No, they're using three simple words: buy, borrow, die. Let me show you how this works with a real example. Imagine you're Mark Zuckerberg in 2012. You own Facebook stock worth billions. But here's the thing, you don't actually have billions in cash. Your wealth is locked inside those shares. Now, if you sold those shares to buy a mansion or a yacht, you'd have to pay capital gains tax. At the time, that's around 20%. On $1 billion, that's $200 million going straight to the government. So what do billionaires do instead? They don't sell, they borrow. Zuckerberg walks into Goldman Sachs and says, "I need $100 million. Goldman looks at his portfolio and says, "No problem, we'll lend it to you at 2% interest. No sale, no taxes, just a loan." And here's the beautiful part, for him, not for you. That loan isn't considered income. The IRS doesn't tax borrowed money. So Zuckerberg gets his $100 million tax-free. This is step one, buy. Buy assets that grow in value, stocks, real estate, companies, art, but never sell them, because the moment you sell, you owe taxes on the profit. That's called a taxable event. So the wealthy have learned to avoid taxable events entirely. Instead, they move to step two, borrow. Banks love lending to billionaires. Why? Because it's the safest loan they'll ever make. If you or I walk into a bank asking for $10 million, they'll laugh. We don't have collateral. But if you own $500 million in Tesla stock, the bank sees that as a guaranteed asset. They'll loan you tens of millions of dollars at incredibly low interest rates, sometimes 1 or 2%. And since interest rates on these loans are lower than the growth rate of the stock market, the billionaire actually makes money while borrowing money. Let's say you borrow $50 million at 2% interest. That's $1 million per year in interest, but your stocks grow at 8% per year on average. That's $4 million per year in gains. You're up $3 million and you haven't paid a single dollar in income tax. Now here's where it gets even cleverer. Normal people have to pay back loans, right? Not billionaires. They just take out another loan to pay off the first one. It's called rolling over debt. Think of it like this. Your first loan is due, but instead of selling stock and paying taxes, you go back to the bank and say, "My portfolio is now worth even more. Give me another loan." They do. You use that new loan to pay off the old one. Still no sale, still no taxes. You can do this for decades. And billionaires do. They live their entire lives on borrowed money backed by assets they never sell. But wait, what happens when they die? Here's the magic. Step 3, die. When a billionaire dies, their assets don't get taxed the way you'd think. There's something called the stepped-up basis rule. Let's say Elon Musk bought Tesla stock years ago for $1 per share. Today, it's worth $800 per share. If he sold it while alive, he'd owe $799 of gains per share. But if he dies and passes that stock to his kids, the IRS pretends his kids bought the stock at today's price, $800. All those gains erased. The tax bill? Gone. His heirs can now sell the stock and pay zero capital gains tax. The debt? It gets paid off from the estate, often at pennies on the dollar compared to what taxes would have been. This is the full strategy. Buy assets, borrow against them, die, and pass them tax-free. Buy, borrow, die. Now, let's talk about what this really means. You're a teacher. You make $60,000 a year. The government takes out $15,000 in taxes before you even touch it. You've got student loans, mortgage, childcare. You're taxed on every dollar you earn. Meanwhile, someone worth $50 billion borrows $300 million, buys a mega yacht, and pays zero income tax that year. They're living like kings. You're trying to afford groceries. And it's all perfectly legal. The system isn't broken, it's working exactly as designed. Because here's the truth, our tax code isn't built to tax wealth, it's built to tax income. If you trade your time for money, you get taxed. If you own assets that grow while you borrow against them, you don't. It's not about working harder, it's about playing a completely different game. And most people don't even know the game exists. ProPublica analyzed the tax returns of the richest Americans and found that between 2014 and 2018, they paid an average true tax rate of just 3.4%. Jeff Bezos, 1%. Warren Buffett, 0.1%. You? Probably somewhere between 15 and 25%. So why does this system exist? Because the people who write the tax laws benefit from it. Think about it. Members of Congress own stock, they own real estate, they have wealth managers. Closing the buy, borrow, die loophole would mean taxing themselves. There's been talk about changing it. Some politicians have proposed taxing unrealized gains, meaning you'd pay taxes on stock growth even if you didn't sell. Others suggest eliminating the stepped-up basis. But every time these ideas come up, they get crushed. The lobbying is too strong, the donor pressure is too intense, and the media frames it as anti-business or punishing success. But here's the reality. When the ultra-wealthy don't pay taxes, someone else has to. Roads, schools, hospitals, military, Social Security, all of that gets funded by working people, while the richest people on Earth live tax-free off borrowed money. It's not a conspiracy, it's policy, and it's been this way for generations. So what can you do? For most people, you can't play this game at the same level. You don't have millions in stock to borrow against, but you can understand the principle. Wealthy people don't work for money. They own assets, they borrow strategically and avoid taxes legally. If you want to build wealth, you need to think like they do. Own things that grow in value, minimize taxable events, use leverage carefully, and most importantly, understand the rules of the game. Because the system isn't going to change just because it's unfair. It'll only change when enough people realize how it actually works. Now, you're one of them. If this opened your eyes, share it with someone who needs to see it. Subscribe for more breakdowns like this, and drop a comment. Do you think this loophole should be closed, or is it just smart money management?